Thanks for tuning in. Today we're diving into a critical topic for small business owners and the bankers who support them, the growing uncertainty around tariffs and what it means for the economy at large. President Donald Trump has proposed a sweeping new tariff regime, including a 10% universal tariff on all imports and country-specific rates that could climb as high as 60%. With the U.S. importing over $3 trillion in goods annually, the potential impact on supply chains and operating costs is enormous. Negotiations are still unfolding, and the headlines shift almost daily. We're seeing a flurry of reports speculating on how high tariffs might go for key partners like China, Mexico, and the EU. For small businesses who often lack the buffers that large corporations rely on, this creates a high-stakes environment filled with volatility and risk. My name is Sanjiv Sanghvi, and I've spent over 30 years as a banker to global companies of all sizes, and have also been a board member on a publicly owned community bank. In these moments, community and regional banks have a real opportunity to shine for their customers. They can be anchors, providing insight, flexible capital, and real-time support to their clients to help them navigate what could become a prolonged period of disruption. I'm very excited to have two extraordinary leaders today who will share their insights on ways in which bankers can make a huge difference as companies across the country navigate these challenging times. First, we have Damon Magnuski. Damon is the founder and CEO of Acceleron, which automates international wire processing and helps community financial institutions earn non-interest income. He brings an engineering background and extensive experience in financial markets and technology development. Second, we have Collazo. Manny is a seasoned treasury and fintech executive with over 30 years of experience leading financial innovation across the US, Latin America, and Europe. With a background spanning international banking, capital markets, and financial technology, Manny has held key leadership roles, including his current role as treasurer at Ionfi, where he supports underserved global institutions through strategic treasury and fintech solutions. Welcome, gentlemen. Let me start with you, Manny. So we've set the stage a little. To put it in perspective, if we do end up with 10% across the board tariffs, that's the equivalent of increasing U.S. corporate taxes by about 11%, taking their effective tax rates up to 24% from roughly 13% today. And that won't be spread out equally. It will disproportionately hurt small businesses that tend to be big importers. Most of the banks you do business with really see themselves as relationship-oriented bankers. What are ways that some of these relationship-oriented bankers can really shine in a time like this?
So first, I think that leaders have to be proactive, right? In volatile times, clients seek more than just financial products. They need guidance and foresight. So relationship bankers can lead by anticipating clients' needs and offering tailored solutions. And I think leveraging partnerships, collaborating with platforms like Ionfi, enables us bankers to provide advanced services without the need for extensive internal infrastructure. And then lastly, in terms of my points, I'm going to tell you that I think enhancing client trust, right? So by offering secure, efficient, compliant financial services, bankers can build and maintain deep trusts with their clients. So let me give you some examples, because what you said is super important, right? Streamlining cross-border payments, right? For instance, Ionfi with one of its Dominican Republic clients, right? So local bank partnered with Ionfi to implement same-day US dollar wire transfers, eliminating delays associated with traditional correspondent banking. I think this enhancement allowed their SME clients to manage that international transaction more effectively. Right? We talk about optimizing foreign exchange, and I'll bring to light a client that we worked with or working with in Trinidad. So utilizing Ionfi's FX tools, a regional bank provided clients with real-time rate alerts and hedging strategies, which helped them navigate that currency volatility and reduce costs, right? A third example, so implementing digital treasury solutions, for instance, a client in Guatemala, a mid-sized bank can adopt Ionfi's white-labeled platform, which can offer client features like transaction tracking, compliance updates, which enhances their digital banking experience without any internal development, right? So I think Ionfi's value proposition, or banks' uh, value proposition, is super important here. For instance, Ionfi, we offer comprehensive services. We offer a suite of services: wire transfers, remote deposit capture, foreign exchange, all developed to meet the evolving needs of financial institutions. But where we really differentiate ourselves, particularly in this time of chaos, is with a strong emphasis on AML and KYCC. I think Ionfi ensures that all transactions are monitored and compliant with global regulations, providing peace of mind for both banks and their clients.
We're going to get into that later because I think that's a really important thing that what you're talking about here. So your emphasis, though, on really leveraging that relationship management role and really engaging with customers and then working with fintechs who can help kind of bridge some of the gaps there, I think is really pretty critical. Damon, do you have a perspective on that as well?
Yeah, and thanks for having me. I think when you look back at the last crisis when PPP came out, the larger financial institutions couldn't roll it out fast enough, and that gave an opportunity for smaller community banks and credit unions to really shine and help out their customers who are really in need. So I kind of view, every crisis has opportunities, So let's look at, you're going to bend over backwards to protect that top 10% of your clients. Make sure that you can roll those solutions out to other, downstream clients, right? And we're going to talk about FX, and we're going to talk about hedging, we're going to talk about other products that potentially can help your institution, not only help your client, but increase non-interest income, right? And that's it. If you can do both, then you're really being successful. You're really being successful.
Yeah, I think that makes sense. I mean, one thing that really kind of strikes me, Damon, is that, if you're a business owner and you're dealing with this much volatility right now, one thing that you can really try to do is just take as much risk off the table as you can. Deal with what you can and try to hedge your remaining risks the best you can. What are some of the risks that you think bankers should be talking to their clients about?
I think most community bankers view foreign exchange and just kind of trade with kind of a skepticism that's unwarranted. They might say, "Oh, we've been doing all your US dollar international payments and you should keep doing those with us." And they're happy making the $30 a wire kind of fee thing, right? But they should be talking about, well, hey, if you're going to buy something from Germany, ask that supplier if you pay them in euros, if you can get a 5% discount. So now if your tariff went up 10% and you can at least shave 5 of it off, that's not winning, but it's doing better than you were the day before. But the bank has to be able to supply those kind of payments, right? And I think there's a misconception that foreign exchange payments are somehow riskier than dollar payments.
If you're a smaller bank, how do you think about that so that you're not basically opening up your customer to basically be poached by one of the larger institutions?
Yeah, so that kind of speaks to who your partners are, right? And Manny brought up, there are fintechs that can help, there are MSBs that can help, there are other correspondents. That's kind of what we're setting up as another correspondent network. You got to make sure that your correspondents aren't your enemies. So if you are, white labeling a solution that lets you do foreign exchange and hedging, that, you're not worried behind the scenes that entity is going to steal your customer, right? So make sure you're doing your diligence, and make sure, I would also say, that you have multiple providers. So in risky times, banks start de-risking other banks, and there's all kinds of risks in that respect too. But more to the importer and exporter, taking on risks. There's a thought that if I'm letting my customers, pay in Canadian dollars or in euros or in pounds, that the bank or the customer is somehow taking on a currency risk. And that's not true. When they make these transactions, they lock in an exchange rate and it's going to get paid. If they're worried about future payments, they can use forwards and options and more sophisticated products to hedge those risks. And by hedging, I mean locking in your future profits, not trying to speculate on where these rates are going to go. So if you got to make a payment in a year, you can lock in today's exchange rate to make that payment, and you should just view that as, I've locked in my profit margin.
Yeah, that's a good point. And I guess it's important to remember that the tariff itself is a US dollar amount, right?
It is, sadly.
So at least you can lock in the bulk of the value of the trade that you're going to do, and take some of that underlying risk off the table. Yeah, that makes a lot
Yeah,
of
that's
sense.
right. Because I mean, what the kind of unspoken problems with a trade war is that now the exchange rates are going to become more volatile, right? So if you don't lock in, the dollar amount value of your import, and suddenly interest rates move, and now exchange rates are not in your favor, you might have had a 5% move in a month, right? And you're like, oh man, so using forwards and things like that can mitigate those risks, and it's about sleeping easy at night. You can't control what the global markets are going to do. So,
Right. I know it's funny, you talk about so many companies when they do hedge, they worry later if the rates go against them. But nobody worries about paying their insurance every year if their house doesn't burn down. Like they actually recognize that it is something that hedges that exposure, and if something were to happen, and they accepted it, it's much more real time here. Manny, I think about what you and your company does, what you do at Ionfi, and whenever we think about managing AML risk and other kinds of compliance risk, a lot of bankers' eyes will glaze over. But I read an interesting article recently in the New York Times, and they had a very provocative headline, and it said, "Trade crime is soaring, U.S. firms say, as Trump's tariffs incentivize fraud." Basically, the story pointed out three ways that overseas companies are trying to circumvent paying tariffs. The first is they're lying about the values of the goods. They're underreporting the value so they can pay a lower tariff. The second is they're misclassifying an item. They're calling a shirt polyester instead of cotton, so they can pay a lower tariff on it. And the third is by transshipping, sending it to another country first so that they can mask the country of origin. Now, all three of these are obviously illegal here in the U.S., and it would be the importer who may be at risk, if it turned out that they didn't pay the right import tariff based on the country of origin and the value of the goods. Are there ways that bankers can first talk to their clients about these issues? Because I think a lot of customers probably aren't even thinking about that risk falling on them and not the overseas shipper. And then secondly, are there things that you can do to really help them address some of these risks?
So that's a great question, particularly in these times where it seems like that's the subsidy and tariff conversation moves like a goalpost, right? It's very difficult to score. And you've underlined, right, in that article, how tariff pressures incentivize fraud, underreporting, misclassifying goods, transshipping through third countries. These schemes obviously expose clients and banks to legal, financial, reputational risk, right? And I think traditional AML isn't enough. Real protection requires know your customer CC and knowing your customer's customer. I think that's where Ionfi excels, because we combine a robust compliance platform, with a deep bench of cross-functional professionals, right, who are pretty keen and knowledgeable in trade finance, compliance, treasury, and all the data science that relates to, right? So they don't just screen, they investigate. And I think that's what makes a platform, particularly our platform, interesting in marketing. I think that's what you're going to have to do right now. Basically, handhold the client, get into the weeds with the client, know both sides, know what's happening. And I can give you like an example on, so here is a Panama routing, and now here's a routing anomaly, right? So a partner bank flagged a set of transactions showing goods originating in Peru, but routed unnecessarily through Singapore, right? Through a robust engine like ours, well, you identified the potential of transshipping, helping the bank block the transactions before exposure, right? So I think powerful platforms and obviously expert human insight and cross-functional precision is what really is needed in this time of chaos, and particularly in these areas. So I think, yeah.
You said something that I have not really heard too many people talk about, which was KYCC. I think we all know what KYC is, know your customer. But you said KYCC, know your customer's customer. So in this example, we're talking about a vendor overseas that maybe one of the U.S. customers is purchasing from. What do you guys do on a KYCC basis that's different than what most banks do on a KYC basis?
That's a great question. So we go deeper. So generally what happens is most AML platforms, they examine the customer. So we go even further. Not only do we examine the customer, but we examine the customer's customer, right? And by knowing what that customer is doing and how they're doing it and where it's coming from, et cetera, some of these issues in fraud can be detected quite readily.
Yeah, that's really interesting. I like that a lot. You know, Damon, I don't know if this is something that you're comfortable talking about, but I am interested in your perspective on it. You know, we've talked about a lot of elements, but there's also lending. You know, a lot of our customers, you know, as they're importing, they're going to need to borrow more money. You know, any advice you would give bankers about how to think about lending in this volatile time, particularly for inventory stock that some of these companies need? Because I think a lot of what I think you guys have talked about is creating an environment of certainty and support and, you know, really kind of hand-holding and being in it together with their customers, you know. So how would you think about that?
Yeah, I mean, as an entrepreneur, you know, prior to opening Acceleron, you know, I always had to co-sign that loan as a person. Right? So rather than go down that road, I mean, obviously you have to do that with some clients, but I think if I was in the position of the community banker, I would say, hey, we recognize that most small businesses have multiple bank accounts. You know, you might have a big regional bank or you know, a giant bank behind the scenes. And the perception is that they can do the more advanced things, the hedging, the FX, you know, maybe some interesting loan products and things like that. But in uncertain times, those things close, and just like PPP, it gives you opportunity. So if what I would try and do is say, listen, we want to expand your line of credit or just keep your line of credit open, but what we need is your transactions to come from that other institution to us. We want to have the whole relationship, and we want to be able to have the services and be able to provide everything you need in one place as best as possible, right? You might not be able to do everything they need, but if they're being de-risked by that bigger institution, you should invite them in as best you can, right? Obviously, there's compliance and things like that, but you should do, as I said earlier, you know, look at what you're doing for your larger clients. You know, your team might think of a clever way to be able to extend that line of credit without hurting the customer. Try and apply that also down the line to your medium and smaller clients too, because that sort of relationships shine is when you can call your banker and be honest with them about your financial situation, and they're not like, sorry, just hang up the phone. You know? So there's other partners as well. You know, like I would say, if you find out that your customers are using third-party, you know, non-bank lenders, find out who those providers are. And, you know, yeah, you think it's counter to what you're doing, but if you can't provide the loan, you should be helping your customer get that loan somewhere else. And I think that, you know, a lot of bankers won't do that, but that would be my advice.
Yeah, I think that's good advice. I mean, Manny, when we talked earlier, you had talked a lot about the importance of relationship, you know, and how in these difficult times, that relationship is really what differentiates you from other institutions. You know, you got big banks with their credit scoring models and their centralized underwriting, and then we've got our community and regional banks where you actually get to know the underlying decision makers, so that can make a huge difference. But customers can forget about that if they don't see their clients during these difficult times. And, you know, what are some of the ways that you would encourage bankers to stay close to their customers in these moments of volatility?
So that's a great question, Sanjiv. I think, you know, we've got to be proactive, right? Volatility demands more than survival. It demands foresight, flexibility, and fast action. And I think that picking up the phone, being connected with the client all the time, you know, going through the situations that are happening. You can do that through email. You can do that through text. I mean, in today's environment, connectivity is important, right? And I think even more so today, you've got to do that a lot more. Clients are open. They're in the dark. Particularly some of the clients we deal with, right? They're underserved financial institutions, right? They face regulatory and operational constraints, and it's the difference in human capital. Our teams need to be flexible, and you need to walk in the shoes of the clients. And for instance, all of us are former bankers. Some are regulators, right? Tech builders like Damon, for instance. We've got to think like clients think, and then meet them where they're at. And I think that in this time of chaos, you have an opportunity, and you need to bridge that gap.
Yeah, that's, I think, a great advice. So as we sort of come to the tail end of this conversation, I just wondered, first, Damon, any parting ideas or thoughts you want to leave our audience with?
When a community bank comes to us, they ask, like, well, hey, what can you do for us? And we say, we can allow you to bring the foreign exchange revenue back in-house, right? So you're currently probably outsourcing it. Now you can bring it in-house. And that solution means your customers are getting real-time rates. They're able to settle all over the world. And it makes your bank look much bigger, like it has a complicated FX trading desk. As community bankers, you have more power and authority than not just with your customers, but with your correspondents, with your regulators, things like that. So in a crisis, don't hunker down. Think about how you can improve what you're doing. And that includes removing manual entry processes, right? So you can't be speaking to your customers if you're keying in everything into 5 different systems, right? And that's something we can help with, right? Correspondent relationships. If your correspondent is putting their thumb on you and not helping you grow and expand your non-interest income, that's something that we can do, right? And then other fintechs and other products, wherever you're getting jammed up, now is a time to, like, hey, how do we unjam this so we have more time for our customers, right? And get that customer focus, because that's what's going to keep community banks in the game. You're not going to beat Chase on basis points,
Yeah.
but Chase doesn't care about your customer, right? so that's the trade-off, right? So your relationship allows you to charge a little bit more, to have a more hand-holding and better, closer relationship. So grow that and figure out what your specialist's at and grow that and automate it and move it forward.
That's good. I think really good advice. Manny, from your perspective, anything you would add?
Yeah, I think Damon nails it on the head, right? So basically, as far as Ionfi's perspective, is we enable regional community institutions to seamlessly process their payments, manage risk, and uphold compliance, all on a single platform, right? Secure platform. And I think our differentiated approach to KYCC and AML surely helps reduce that friction. I think what's happening here is, in volatile markets, leadership is defined by how well you can protect your clients and position them for growth, right? If you take that perspective, you're going to succeed very well in this chaos.
Yeah, I think both of you guys have really, really good insights on that. It's fascinating to me to see how different banks will respond in these times of uncertainty. I mean, some bankers will do nothing, some banks will do nothing. They just want to take a wait and see view of it. Others will try to do everything they can to help manage their customers' risks in front of them. I think you guys have added another element today in the conversation, though, that I hadn't really thought about before, which is these banks also can't stop doing their business, and they can't stop being and working to be the institution of choice for their clients. And in times of uncertainty, I think a lot of companies stop investing because they're uncertain about what's going to happen. But if they haven't already introduced more compelling foreign exchange capabilities to support their clients, now's the time to double down on doing something like that, as opposed to holding off and waiting to see what happens. Same thing is true on managing their AML and compliance risk. If they haven't really thought about how they want to do that, for the first time, you could argue that we are introducing a time and tools that can help our customers, not just help the institutions, which I think is slightly different than what we're used to. So I think it's pretty clear that coming out of this, which institutions are going to be most valued by their clients, and those are going to be the ones that are really proactive in being really, really compelling relationship banks, talking to their customers, sharing with them ideas, demonstrating that they're there for them, and then delivering on real value-added solutions that can help them manage some of this risk. You guys have been really great. Thank you so much for participating and sharing so many of your insights in what I thought was a really engaging discussion.
Thank you.
Thanks so much.